Hey everybody, great to be back here with you today. My name is Mike Fairborn, and glad you joined us for our Trading ThinkScript class, where we do look at trading many of the ThinkScripts that we've created, as well as new ThinkScripts. And by the way, this week, for this week, we will be looking at a couple of key requests that I thought were really interesting and unique. One was on implied volatility. Got some great ways to track that. I think many of you are looking for implied volatility for a number of different reasons that you might be looking at that. As well as we had a request come out on the Ichimoku Cloud. I think I'm saying that right. Ichimoku Cloud. A really interesting indicator, actually, when you break it down. We're going to break it down today, highlighting exactly what it's doing because it is unique from other indicators out there. And we're going to talk about that. We're going to find a way to develop immediate signals on its rarest indicator, that is its bullish signal, breakout above the cloud or a combination of two clouds, as we'll take a look at. But I look forward to it very much. More on that as we dive on into it. Welcome to all of you here today. JV, Wiley, JD, Kelly, how's it going? As well as Cecil, Wacky, Rojo, and there is Will, the sunset there. We got BJ. Hello, BJ. Good to have you back. As well as Robert, Michael, Art, many more. We got Riceberg, Sharon, and Austin, folks. Any questions, comments you have, throw those in the chat box so we can address those for you. I'm joined in the chat by a good friend and colleague of mine, Kevin Horner. You'll see him in the chat is KH, and encourage you to follow Kevin on his X channel. That's formerly Twitter at Kevin Horner CS. He's got some great stuff there. You can follow me as well, Mike Fairborn CS. Would love to have you all on board, whoever's interested. So looking forward to it, folks. Let's dive on into it with some disclosures to really get started here. Okay. First off, equity and index options carry a high level of risk, not suitable for all investors. Information here is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. Now, the Paper Money software application, it too is for education purposes only. Back testing, we do talk about back testing in this class. We actually had a class on back testing one time too. We might need to revisit that. There have been some updates to it, but just a quick note, back testing results presented are hypothetical. There's no guarantee that the same strategy implemented today would produce similar results. We know that things can be similar, but there's always something different. The market is, in fact, an open system. It's not closed. New data coming in every day. Okay. Investing involves risk, including for some products more than your initial investment. Now, past performance of any security strategy does not guarantee future results or success. A look at the futures, because we do look at futures charts and futures charts only. Uh, okay, so futures options trading involves substantial risk, not suitable for all investors. And folks, yeah, just a quick overview again. We do hit this from time to time, and that is steps to think scripting, identifying the goal. Can ThinkScript meet that goal? And if we're talking about indicators, which we are talking about today, in many cases, this is pretty much set up and ready to go. It's a nice way to build a ThinkScript based upon indicators initially. Okay, outline the steps to script. We're going to talk about that. Apply ThinkScript tools. Write custom scripts when needed. Test what is written related to the goal. Share the ThinkScript link. Now, anytime we're talking about an indicator, the first thing you want to do is really understand that indicator really inside and out. You want to do that so that when you're creating that script, you're getting the data that you want to get because you understand the indicator. And so when you create a scan, it's giving you the stocks. You don't just want to start looking at the stocks that aren't meeting exactly what you want those stocks to meet based upon the indicator. So, two of those today. I thought they were really great requests. Let's go ahead and dive on into those right now, though. We'll put this up on our charts and we'll clear this off first. But just, hey, a quick overview of our markets here as we look at it. There's been some volatility up here. Um, we'll see what happens. This crossing above this big level, we did see a sharp move down here in the markets, but we bounced right back. The question is this coming over here? Do we hold above that 7,000? By the way, I just want to throw this out here because some of you have been around as long as I have in the markets, and you might have heard it. It's kind of an older term. I heard it a lot in the 90s and 2000s. Does anybody remember this term? Sell in May and go away. The second part of it isn't nearly as catchy. It's something like Yeah, come back in towards the end of June or something like that. I mean, it doesn't really work. But sell in May and go away is one of those time frames that some traders have mentioned in the past. I don't know if you heard about that. Why is that the case? Well, historically, let's just take a look at something that we do pull up from time to time. Not really much in this class, but the sell in May and go away. You look at the last 5 years, you say, huh? Question mark. We went up, generally speaking, over the last 5 years in May. Yes, some of you heard of it. Um, Yeah, and as I thought many of you might not. And Wiley's heard blood in the streets. That's right. It's kind of what it gets at, Wiley. Yeah, you're along the same line there for sure. And I know what you mean, but yeah, exactly. Let's do this. I'm just going to highlight this. Let's make this comparable so we could see it. That's always a good idea so we can compare it. The price data was, way back then it was a little bit different 5 years ago. Now wait till we go 10 years ago. Okay. So sell in May and go away. Now, I'm not saying it, I'm not seeing it on average. We're looking at averages here. But if I were to throw out a 20, and if I were to go inside that indicator and go to appearance, where I can find not just the average, but let's just say, how about just give me all the darn years? There's going to be a lot of 20s, okay? A lot in here. There you go. Now, what I'm highlighting here is that we did have some really big Mays going up, but we also had a fair number. Let's highlight them of Mays going down. Boy, that's tough. Let me go 10. I think we'll still see it in 10. There's just more here, but when you see so many lines, it's kind of hard to distinguish. Okay, there's a clear downward move. Sometimes you'll get this. See how we came up over this time frame? Yes, that is the end of April, and you come back down. Okay. This was a little bit of a consolidation. That was a sharp move down here, and you'll see that there was a sharp move early. It didn't extend all the way to the end of May, but sometimes, like I said, yeah, back in June, look how many of these end of June. Now, this is a lot more, there's more correlation here. Look at the June. Look at that. That was kind of flat, but how many of those actually went up in June? There was three here. I'm drawing one line to represent three because we're looking at a total of 10 years. Case in point, this time right in here can be a little bit hairy historically. Now, it doesn't have to be. Sometimes you get a big move. You notice this one over here? Well, gosh, what was that? What we're seeing in there is COVID, which messes up our average because this move was so massive, it throws off all the others. But I'm just saying in general, we can see that. So sell in May and go away. Park that in the back of your minds. As you come over here, we did cross above this level. There's no doubt about it. We broke above that well, it was 7,000. That 7,000 number, we'll get the actual numbers back here. Take it off the price scale. There we go, 7,000. So generally, this could hold support and this could be quite strong. But we just want to be mindful of that too. Maybe some of the stronger stocks, we looked at this in the swing trade class this week. Hey, they've at least done what the market's done, and that's break above prior highs. So park that in the back of your minds as you begin to think about think scripts and different things to consider. Now, one thing that did pop up, and I want to address this initially, and that is IV, implied volatility for short, right? Implied volatility. Uh, a lot of traders will use that across, let's say, for different areas. I'm not going to go into options today, but just basically with options, right? They might be looking at it for different sorts of things. But that was a request that we had in. And by the way, I'm going to show you a couple of different things that I learned with implied volatility on how to track it. Because, the implied volatility for the market, and by the way, this is something that a lot of traders look for too, is VIX trading above 20. We did it the last 2 days, traded above it. We didn't close above it yet. I mean, I don't know if we'll close above it. We might not. It looks like we may not. Well, I don't know. It's hard to say. That's a bit of a shooting star candle. But that's your 20 right there. But 20. Now, how many stocks in the S&P 500 are greater than 20? Boy, there's a few. And there can be different strategies, and they could just be more volatile. And people are concerned with volatility at different times. But they, like I said, they might use it for different kinds of scenarios based upon the instrument they're using. Okay. So, one thing I learned a while back, and that's this. Oh, let's go right here. Yeah, just go back over to this. This is just happens to be a sector right now, just some basic information, nothing too crazy. But if I wanted to, I'm going to give you the basics on implied volatility first. By the way, let's put it up instead of just talking about it. This is something you can add to the chart and see it. IMP or IM, yeah, it's just implied volatility, just like right there. IMP, you can see it coming in here. Let's highlight this and I'll show you. And it can change around earnings, of course, earnings events. This is, again, a topic request that we had. Let's go ahead and take a look at anything. Say Apple is an example chart here. You notice around earnings, and you get variations of this, but like a lot of times, traders might be looking for a post-earnings event, how implied volatility can dip like this, and it did dip a little bit here, and then dip a little bit again down below. Let me use yellow to highlight that a little bit better for you. There was the dip post-earnings. Uh, Earnings simply can just mean an expansion of volatility in price. Prices can expand, and when you get past earnings, that event can cause prices to kind of dip. I mean, I'm sorry, I should say this: prices might not be as powerful up or down. The magnitude of price moves over ranges might start to drift. Now, one thing you'll also note too is about, and sometimes trader would say this, about 1 month before an earnings event, or it could be another economic event, you might get a general increase in implied volatility. Look over here. See that right there? Just right there. You started to go higher. I'll highlight that again. Right there to earnings. And that can change different strategies amongst different instruments you're looking at too. And then afterwards, it can dip till about a month before. There's not like a set number, but generally some traders might use that. Okay, so tracking this was the question. How do I see when prices have crossed above it or above a particular number? We looked at the VIX as a representation of volatility on the S&P 500 index. Now, one thing we can do is just simply go over here. And I'm just going to throw in the S&P 500. I'm going to give you guys a few different ways to see this. I think many of you already know this. But just like you have beta here, I got my 1 month percent change, fine. But yeah, of course, we can just put a custom column in here and just find out where the implied volatilities are on a basket of stocks. On a basket of stocks. If we already know the basket of stocks and that we're potentially already interested in, S&P 500, for example, NASDAQ 100, Dow Jones, or you create your own scan. You know what I'm saying? You got your own scan in here. That could be used too. But just do this. There you go. Those are your highest volatilities in the S&P 500 SanDisk uh, on down the line. And you'll notice that many of these do tend to be pretty big movers. And say, for example, if we were looking at AppLovin that was on that list, hey, this can be a mover. I mean, this did go, that's like almost 150 points between here and here. Obviously, 750 range down to below, down to almost like 350. Big, massive ranges in prices, right? It's going to have a high beta. It just is a mover. So sometimes traders using implied volatility, they might just say, hey, if it comes over here, gives me a bull flag. I think it's going to be a bull flag. Maybe there's going to be a bigger move. Implied volatility is higher. You can see it right over here. It's high, right? This does help to track it though. And there you go. It said 90, 0.9, 90, or 0.915, and I think it rounded up over here. Where was it? Right here. I just want to make sure it's lining. Yeah, it rounded up to 91. Do you see it? That's one way to do it. Now, if we wanted to scan for companies, how about this? We wanted to scan for companies that are greater than a particular level amongst a bigger basket of stocks, for example, or say, for example, just barely crossing above or breaking below a volatility range, which was the question. We can just simply scan for that as well. Let me just hit this question real quick, make sure. Okay. Uh, oh, there was a question in here about, let's see, I think Kevin reposted about the, just want to make sure I'm tying anything that might be connected to what we're discussing into this and make sure I'm getting this into place. Wacky says hard to trade on the nuttiness. Yeah, it can be. Oh, Any ability to scan for tight bid and ask spreads. Okay, got a thought on that too. Hey, let's tie that in. Thank you, Kev, for typing that in because I just saw that comment as well. So a quick note on that. Let's do this. I'm going to show you the scan, and then we'll take a look at the higher bid and ask the tighter bid and ask spreads. Tight, yeah. Okay, cool. So let's do this. We're just going to go into our study over here because this is something we can. It's just a simple indicator, so we can tap into it fairly quickly right off of the condition wizard. It's a built-in, but it could be very, very useful, and you can get ideas that you can build out further. In terms of what that thing script could provide us with implied volatility. If you think of different ideas, and that's something you might have in mind, we can do here in this class as well. But just to show you really easily here, so everybody can do this, we're going to add a condition wizard in. In this case, we're going to be talking about implied volatility first. That is our study. There it is right there, implied volatility. And like we said, it could be crosses above or crosses below, whatever the case might be. In this case, though, because we've narrowed it down to a study, generally when the studies of focus, it's either crossing above another indicator that's plotted on the chart, or it's simply going to be referencing the value of implied volatility over there, right? So say, for example, we were looking at something that just crossed above well, let's say that, I mean, 60 is kind of a bigger number when you're looking at the VIX at 20, for the S&P 500 index collectively. What if we did this in the last, let's just say 3 bars? Are we going to get anything that went above 60 in the last 3 bars? Because that's what we're saying here. Now, before I run this, we could say, just give me anything greater than, if you wanted to do that too. But then again, isn't that kind of like what we just saw in the Market Watch tab where we organized it based upon a hierarchy of the highest implied volatility down to the lowest implied volatility? It's kind of the same thing, right? If you know the basket of stocks you're looking for. If you don't, well, if it was more defined than just the S&P 500 or something, yeah, you could do that too. But this is simply a cross above. So we're looking for volatility to increase. Let's go over here and just say save and click OK right there as well. Okay. And so if you did that, you can just go ahead and just click on scan, and we're scanning in the S&P 500. So it crossed above six, nothing. Nothing did specifically. Okay, but this would pull it up if it did. I'm going to do something like 20 bars in the last 20 bars, within 20 bars. Okay, let's just run this. No matching symbol. Implied volatility crossed above a value. Let's relook at this again. Implied volatility, exactly, crosses above this. What if I said greater than or equal to? I mean, that's possible we wouldn't get anything like it, but how about within the last bar? Let's just make sure this is working. Oh, one more I got to click. There we go. And it's simply just greater than 60 in this case. Nothing's coming up. Interesting. Okay. I wasn't having this problem earlier today, so I don't know what is going on there, but it is looking at implied vol. And hang on a second. Volatility over this basket of stocks is greater than 60. IV percentile. Interesting. Yeah, let's try that. Let's just see what we've got. I might need to look into this a little bit further. We have a general way of looking at it, but we're looking at, let's just see. Wide volatility. No, that's the one I was using. Value of 60 above that time frame. Yeah. Huh. The greater than should have easily worked. We know we have several that are above that level. Boy, I don't know why. I don't know if it's a demo account thing or whatnot, but maybe you guys could try it on your side just to see if it would work. Scanning in the S&P 500, that's a bigger basket of stocks, and it's immediately rejecting this right now. One thing I could do is I don't have um, we don't have options available in this class to discuss. So just as a side note, otherwise it probably could be in some of these other tabs up through here. Say, for example, here, it might not be pulling it because it's a stock, but that's so odd. I'm pretty sure I was right where I was here. I know it's tying into that. I'm trying to be careful just so we can not have any issues with this broadcast because we don't, you know, I'm not positioned to discuss options in here. Um, so keep that in mind. Um, a quick note too, if you were going back into that scan tab, and this is really interesting too, because if we were looking to just find something that might have a higher, or I should say a tighter bid and ask spread, and you might be looking at different sort of instruments here as well, not just on the price. Just a quick note on this that you could look at. Let me show you this right now. If you were just building this, we can build this. So here's one that we could look at just right from the get-go here. And we'd say like stock, for example, you might have a stock price, closing price that's greater than, I don't know. You could say, greater than whatever, 30 maybe. 30. In addition, we could say we go down to study. I'm going to go down to average volume, and maybe your average volume is going to be north of a million, maybe 2 million or so. So on a 50 period moving average, you're above 2 million shares traded a day, each day. Uh, and then you could do one other thing, and that is you want to intersect that up here with something that is going to give you penny wide options. Now, if you have penny wide options, for example, uh, penny increment options, you could just throw this in up top without talking about options. I'm just going to show you just one of the things that some people might use. They're looking at different instruments here. Let me show you this right there. Penny increment options. And all it's simply saying is that on those options, we're not going to look at any options or any trades, but you can adjust those amounts by pennies. And that oftentimes means that you're going to have a tight bid and ask spread. I'm going to jump this up to 50 just for now. How about that? 2 million shares in the S&P 500 on average. There you go. I got 120. And so what you can do is come over here and just take a look at them. So watch this. Here's our bid. Got the bid in, and we're going to add the ask, and let's see how good we're doing here. Ask. Okay, that's fine. I'll just drag them over. But let's put them right front and center between these two. I didn't put an upper limit on price, but there you go. So now do you see, I'm just looking at price of the stock, but do you see the spread here? See how tight that is? These are expensive too. These are expensive stocks. Many of these, clearly in the 100s. But look at that. That is a 250 stock. Happens to be Amazon, but it found it. $255, and it's like penny wide over here. Right now it was 3 cents. A second ago now it's 2 cents. It was 1 cent before. Just this could be helpful for you. Okay. Did tap into this. I just wanted to highlight that. Although we don't look at that in this class, at least to this point, we don't look at options. Okay. So I wanted to throw that out there for you guys. Just a quick note. Yeah. So that's that. All right. Did that help? You can take a look at those instruments, but that's going to help. Higher volumes can help for sure. By the way, S&P 500 stocks, that can help. This can help intersecting with, um, and here's something cool that I worked with a manager here with today too. Just generally speaking, just, looking at scans as well. And that is this over here. If because one of the big things when you're talking about implied volatility, we just talked about it with earnings. You can come over here. It's a great feature. If you wanted to go around an earnings event or before an earnings event or nothing in the next 30 days or whatever, if your time frame was a swing trade time frame, you could go into corporate actions right here and then just simply slip down to earnings. And then you notice that it says, earnings and earnings announcement anytime as opposed to pre-market, aftermarket in the next 30 days. This says it does have an earnings event. It has one. What if you didn't want an earnings event over that time frame? Does not have. So it's a pre-built indicator, so easy, and I'd prefer to do that as opposed to a script. I think more people can just understand. It's right here at your fingertips too. It's just a built-in feature. You just need to know what to look for. But look at that in the next 30 days. click scan. This is going to cut it down a lot. There you go, 36 companies, and there you go, that still meet that same criteria up top, volume criteria, minimum price criteria, and they do not have an earnings announcement scheduled in the next 30 days. Recognize some of these names? It's in the S&P 500, so I'm sure you do. Delta, Capital One, Citi, on down the line, Pepsi, Oracle, you name it. 36, that's a big reduction though. So it's a quick way to use this tool to help you. Okay, we good there? Let me just take a look. I think we're all set. Yeah, you can look at others in there too. Yeah, Wiley mentions weeklies. Absolutely. I mean, those can be adjustments that could be made up top. Yep. It's funny because when you start talking about scans, you can kind of reference different components that would impact different instruments, option stocks, whatever. But we're not, yeah, we just don't trade them in this class. So, all right, folks. Well, the next one that we had, which is really fascinating too, is we move on. I got to keep a track, keep a look on, keep track of time here. But it's going to be the Ichimoku Cloud, which I had never really looked in that much. There were other individuals that I've known over the years that have looked at it. There it is right there. But we're going to get a little explanation here too. Oh, it did load up for us. Beautiful. A quick reference for you, and then we're going to break it down. We got to understand really what this indicator does before we design anything to really give us these immediate signals that are not very common at all, but that's exactly what traders look for. So this is where ThinkScript could be very, very useful, kind of sorting through all this data and saying it's above this cloud, for example. A key bullish indication that traders use. Many of them do use. So the study is used to forecast price action. It plots five, that's right, five, two of which the Senku span A, Senku span B, that basically represents the cloud. There's also a lag bar, which is 26 bars forward by default. I'll show you guys all these things in a second here. But three other methods. You can see it's listed there. I'm going to go into them in detail anyways. The signal line confirmation, support, and resistance lines. Basically, it's referred to, many people call it the Ichimoku cloud. And it's because what that cloud what the Ichimoku does to develop that cloud, right? To create that cloud on the chart. Here is that cloud. I've talked enough about it. Now it's time for me to show it to you. There's the cloud, okay? Now, there is a span A and a span B part of the cloud. Now, you'll notice in many cases when you're starting to see bullish strength over here, we're still just stuck on app 11, that's fine. But notice over here, when we're starting to maybe see a little bit of a trend, this is what's referred to as a span B cloud. Span A, you might have guessed it, that's going to be your red cloud right here. Now, what traders are looking for is like a sign, they might look at it as an additional form of an expectation, or what they might consider to be like, hey, I'm looking for at least a little bit more confirmation from an indicator. That is this right there. It's extended, it's long, but we'll plant this seed first, and I'm going to explain all these lines here for us in just a second. Notice anything interesting about this? You can find these all over the place. Now, this was a rare event. It didn't happen very often. Look at all this. Not much. Nothing. Did we break back up above that cloud? No, not since the trend changed. Okay? It's rare. It's a longer term type of move. Now, could you use this on a 30-minute chart? Absolutely. For a larger 30-minute move that could fit into a daily chart. But this is almost like a daily chart. This is what it reminds me of. A daily chart moving into a weekly type move. Question mark is what some might consider it, because it's looking for those longer term sort of confirmations. Do you see what I've highlighted here? Let me clear off everything. Look, you see the flag type of formation? Notice right over here, you started to just, you broke above and you dip back down below. You're waiting for a confirmation. Boom. You get back up above the cloud, and it does happen to run. There was some good strength going into it, but you're getting Signs, initial signs right there. Okay. I wanted to show you that because that's kind of, I think, one of the more fascinating components of this. Now, as we break this down, you can see the default. And when I say default, this is how they use it. This is different from a moving average. We've got some lines in here. You're going to notice a quick moving line and one that is a little bit behind it. This is called, let's pull it up so you can see it. This is right here. Let's pull it up. So this is the Tenkan, and then this is the Kijun, and this is a 9 period. And what this is doing is just completely different. It's not your more normal moving average based on closing prices. It's more like a midpoint of the recent range. So it's different, which is why it has that smooth, sort of a stubborn personality associated with it. It's kind of smooth and stubborn. It only changes when it changes. What it's doing is this. This 9 is really interesting. This 9 period, it's a 9 period, so it takes the 9 period high. Okay, I just put a dash in there, plus the 9 period low. There's the nines. We're talking about 9 right there. This is the default they use. They're going to take this, we add these together, and we simply just, once we get our number, X, we divide it by 2. It's a smoothing approach. The highs and the lows divided by 2. Okay? The Kenjun right here does the exact same thing with 26. Why 26? I don't know. But it does the high plus the low of the 26 divided by 2. Okay? It does the same thing. And basically, that is what creates a cloud to a degree. To a degree. So what's really going on is when you see the cloud break, when you're breaking above the cloud, basically the span A that I showed you over here in red, it's faster, but it's based upon the Tenkan and the Kijun, which respond more quickly to the recent price move. Okay. The span B moves slower. It's using a 52-week period range. Okay. So the crossover, see the crossover here? That occurs when the faster span A, which we just talked about, which is the Tenkan and plus the Kijun, it adds the two together, whatever that number is. That's the faster line, moves from one side of the slower line span B to the other. In other words, when you get the combination of these two moving above a 52-week range, the combination of these two together, okay, and this becomes greater than the 52-week range, which is a longer period range, then you get the breakout. Then you get the span B. That's what flips the cloud. So there's a lot going on behind the scenes. I could probably teach a class just on this, but I've got to get into the scripts. Okay. So we just want to show you. So where do traders often look for entry points here? Well, it's interesting. It can be above, and let's hit some right now as we we look into this. Say for example, we have this Masco Corp. Okay. This is an interesting example because we had a long period downward move over here. And notice what we did? We actually broke above that level and trended higher. Now, this is considered to be just as good of a move because you broke up, but it was a little bit stubborn. If you look behind the scenes, look at it. Okay. You see this move? It's kind of like a longer term flag. I'm just saying these are more like a longer term, a potentially longer term confirmation. Folks, we did not sneak out of that cloud until right there. You see, we're all under the red. So if I can just highlight what's going on, it's something like this. And you start to move out, and then it says, okay. So it's trying to identify and give further, information or an expectation that the trader might have of an extended move. You saw it here again. Now notice over here. I mean, I didn't choose like the greatest chart ever. I tried to choose one that was actually quite choppy here. Okay, pretty choppy. Now you're on the lower end of the range, and that lower end of the range is interesting because you're starting to move through the cloud. Look at this right here. You just got above it right there. You see what I just drew? A little bit, it's sort of like a flag, almost like a triangle breakout, and then you're still above that cloud. It's kind of interesting. We're just looking at bullish here. And by the way, even after you broke above span A cloud, notice what happens? This is another form of confirmation because you're shifting into span B, which is your price is clearly above it, but it's showing a change. And you got that change right at the end. Look at it, right at the end of the flag pattern. Okay. Few things going on. It's not really like the easiest indicator in the world to understand, but you start looking at it, you can pick up on it. If you want to do it, I'd recommend just using it on a number of charts to get your eyes more familiar with it. I'm going to show you this because it is an indicator. It's not that bad to do. I'm going to switch off of this. Okay, everybody got this one that we talked about in terms of finding different ranges? Let's click over here, here, and here. And all I'm simply going to do is add this indicator in. It's an indicator. We're still in. I'm going to clear this penny white out. We'll just look at the S&P 500. I'm going to add a filter. Um, this topic request, also just use this indicator. So very, very simple to do. We can do this right in our condition wizard, but you've got to know what to do. You got to know the indicator. It's a little bit tricky. So condition wizard down below. Yeah, exactly. Price, because price is going to be going above, and we're looking at closing price. Any, closing price is any price that we're trading at right now, and at the end of the day too. That's how this is used. Now we're going to say, in this case, crosses above the cloud, but we've got to find that cloud. So we've got to go into the study, and there it is. All right, next to the stick sandwich. Okay, don't know what that is. Let's go over here. So it tells you what you want to be looking at. Do you want to look at, you know, um, the drivers behind the scene, the Tenkan and others, the Kijun? No, you're looking at these two. By the way, that's the lagging time frame, but we just are looking for a break above the span B cloud, or excuse me, the span A or the span B. I'm going to say something like in the last 3 days. Okay, because this can be a big move. Remember, what we're looking at here when we say this is we're saying prices going down like this. Remember, they're breaking above. So we're trying to find an interesting indication. And maybe something like right here is where that cloud starts to impact over here. Okay, I'm using this with the trend. I'm trying to use it with price patterns so we don't forget what we've learned in the past through all the stuff that we've been going through, you guys, with technical analysis and etc. So we've got the span A. That's it. Except for one thing. We've got to make sure that it could also be above the span B cloud too. We can simply do it just by replicating the first portion of this. It's a cross above. You could do a cross below too if you really want to find maybe some areas of potential weakness out there. Cross below is clearly there. But this is the action we're looking for. And a lot of these indicators are based on action. Now, let's click on it. And we're going to go right over here and just go to the span B now. Now we've got the complete cloud, right? Within the next 3 bars as well. Boom. Okay. So if I save this, click OK, we're just looking at, either of these conditions unfolding. And let's just run through this right now. So we got 13 companies. Okay. Let's look at some of these right now. We got BA. Boeing just happened to be up that list, top of the list. Okay. Okay. We've been below the cloud for quite some time here. I'm just trying to examine maybe the trend and the potential for the move up. Now, when you guys see this right here, based upon what we just looked at with that AppLovin example, is that a screaming buy? Based upon the way traders use it, it is not. It's this. It's a wait and see. Basically, it's saying we might be on a move that could be heading higher because we're showing that strength from that unique indicator. But what is it we might be looking for? Well, how about this? What about a flag pattern? It's hard to see with all these clouds, and you might want to remove that indicator as you're putting this on so you can actually see what's going on behind the scenes with the open, high, low, closed data. In this case, candlesticks. But we actually did clear a prior high right there. Do you see it? It's tough to see because of the clouds, but we did break above a high here. Traders like to say that could be a positive. The trend could be shifting. Remember, this looks for that longer term move. We are above the cloud right now. Span A. Prices consolidating. You see what I'm saying? All right. That's that. We saw some others on the HAS was on there. We looked at MAS before. HAS. Okay. This is pretty much what we're trying to describe. Here's the move up after a long consolidation. By the way, just like we saw over here, see the long consolidation right there? Where did we get back up above it? Prices, it's very tricky to see. It was right there. That's where we moved above the cloud and we stayed consolidated. This thing actually turned into the span B right there, right? More strength, more indications of strength right there. Wow. Breaking above. This is fascinating. I mean, running a scan on this could be insightful because that's kind of getting this, kind of like that. Maybe one of these question mark traders might be looking for. I'm just saying we just oh maybe it got there. It's getting close. We looks like we jumped above it twice right there. Do you guys see this? Now, be thinking of other ways to potentially use this as a think script. We can talk about it as well going forward. But what a fascinating indicator. And you guys, I really do appreciate the topic request. There are so many. Have you looked at the list of indicators lately? It's pretty big. Now, I'm aware of this one. It's been around for a while, but I wanted to highlight it because I think it can be interesting, and particularly in, those longer term, those longer term trades. Traders, that's where they'll oftentimes use it. Again, in this class, there were some references to options just because the, implied volatility, but we didn't trade any options. We didn't talk about any options. But I just wanted to highlight that. We do talk about those in the swing trade class and other classes that Kevin teaches. So be sure and check out his stuff. By the way, folks, if you're not already with us here on Trader Talks, would love to have you all on board. Just click on the link. I put it in the chat. But if you come over here and just click, go to Trader Talks, love to have you guys. You can click on our playlist, etc. And also, if you did find this discussion useful and helpful, valuable, I guess is what I'm trying to say, smash that like button up. Just lets us know that you're finding this information helpful and something that you can, potentially use going forward in your trading. Anyways, it just lets Kevin and I know what we're doing. All right. Anyways, lets us know that you guys found this effective. All right. On that note, be sure and follow Kevin on X, Kevin Horner CS, Mike Fairborn CS, and I'll keep an eye on some of these questions that came through later. All right, everybody, have a great rest of the day. See you next time.